Hello, I'm Sylvia of CPDbox.com, and in this video I will give you my answer to quite a hot issue these days: how to account for investments in gold. Well, the thing is that many economists predict that the devastating economical effects of the pandemic will show up sooner or later, and gold will serve as a preservation of wealth. So many people and institutions are now starting to invest in gold, and the logical question is how to account for similar investment. I am not making any investment recommendations here. This is just about the accounting. So today's question comes from Ümit from Germany. Hi Sylvia, how should we account for the gold under IFRS, especially if it was acquired as a form of value storage? Should we account for the gold under IFRS 9 and IAS 32 as a financial instrument, or should we account for it under IAS 40 investment property? Very interesting question. Currently, there is no specific standard in IFRS that would really deal specifically with precious metals like gold, silver, or platinum. Now, let me clearly say that no, you should not account for gold as for financial instrument under IFRS 9 and IFRS 32 because gold simply does not meet the definition of a financial instrument. First of all, financial instrument arises from a contractual arrangement, and there is no contractual arrangement when it comes to gold, especially physical gold. And the same applies to IAS 40 investment property. Gold does not meet the definition of the investment property because under IAS 40, investment property is either land or building or their parts, no gold, neither other precious metals. The truth is that the standard IAS 2 inventories says something related to gold in Article 3. Commodity brokers and dealers should measure their inventories at fair value less cost to sell and recognize the changes in fair value in profit or loss in the period of the change. Well, it applies only to commodity brokers and dealers, but not to other companies who might acquire gold just for the investment purposes to store value. So what to do in this case? Well, as we have just found out, there is no accounting policy prescribed by IFRS to deal with the gold or precious metals as value storage, right? So therefore, we should develop our own accounting policy. This is what IAS 8 says. If there is no IFRS that specifically applies to the transaction in question, you should develop your own accounting policy. And IAS 8 says that you should refer to certain resources when making your own policy. So you're not going to make it out of the thin air, right? What resources? Primarily, you should search for IFRS standard arranging the similar and related issues. Only then, if there is no similar standard, then you can look to the general concepts and criteria in the conceptual framework, and then you can look to other publications of other standard setting bodies. Well, what if their sources contradict? In this case, you must take other IFRS about similar issues first into account. They have priority. And what is the issue or transaction similar to the investment gold? Well, let's sum up the characteristics of the investment gold. Number 1, it has indefinite useful life. Number 2, its fair value tends to increase over time, which is not always, of course. Number 3, the main purpose is to store value and get income from its capital appreciation. So really looking at all of this, it seems to me that the fair value model applicable for investment property under IAS 40 would be very appropriate for investment gold too. And moreover, if you look at financial assets like shares that you buy for capital appreciation, you can choose to measure these assets at fair value through profit or loss, which is essentially the same as fair value model under IAS 40. So how should we apply fair value model to gold? Initially, you would measure the investment in gold at fair value. This is not the same as in IAS 40, where you measure it at cost. Well, but let me remind you that we do not need to follow IAS 40 strictly because we are making our own policy, and it seems that fair value is more appropriate here. Then subsequently, at the end of each reporting period, you need to remeasure the gold at fair value and account for any changes in profit or loss. No depreciation, nothing at all. Now, when I did a little research on this topic on internet and in books, I actually found a nice accounting guide for gold, which was issued by the World Gold Council. It is very detailed and actually speaks about the accounting for monetary gold, which is essentially investment gold, held by monetary authorities. I would personally not take this guide into consideration when developing my own accounting policy under IFRS, because it requires accounting for changes in other comprehensive income, not in profit or loss, and that is contradictory with IAS 40. And remember, IAS 8 puts the IFRS standards dealing with similar issues first, and only then you can look elsewhere. So you should really apply similar accounting policy as fair value model under IAS 40. Anyway, the guidance by World Gold Council is still very interesting to read, but remember, it serves to monetary institutions like central banks, not companies. And remember, your own accounting policy developed by you can be different from this suggestion, but you always need to take characteristics of the transaction and the guidance into account. That's it for today. The information in this video is not a substitute from a professional judgment of CPA of your own situation and circumstances, and you should consult CPA or other qualified professional. If you want to ask your own questions, send it via contact form on my website, and I will make a video like this one. Thank you very much for watching. Please sign up for my channel if you liked it, share this video with your friends and colleagues, and stay tuned. Bye!